This is Rod Kusin, Spooman for Risk on February the 8th, 2019, all times on the Charter Central Standard Time. Well, this morning, where was this market going to go along? That was pretty easy to see. We ran retracements from this low all the way up to our high here, coming down to a 50% retracement at 2680. And we just about got there. The premium was divergent and up we went. So let's just take a quick look at that. This was the low. Okay. So what you're looking for is divergence on the premium. Now, we're going to measure, first of all, from this low here, when the premium hit a new low for the day. Then we come into this low, where we aren't really quite at the level, the price level that we expected, but it was a nice divergent long right in here, which we'll show you. So now what we need to see is for us to come down again and be divergent, the lows of the premium being greater than they were, of course, here and potentially right in here. And you can see that's exactly the case here, and the moving average helps us to see that quite plainly. So nice time to go long, really not difficult to see at all. But the main purpose of our discussion today is going to be looking at how to manipulate some of the settings in those areas where you need to be making more major decisions. The strategy, the automated open source strategy, is going to take care of all of the minor critical items that you don't want to take time to examine. The strategy knows what conditions you need to look for, and of course you can program those yourself if you like to see specialized conditions that we haven't already programmed into our default strategies. But in any case, the major decisions we leave up to the trader. Now, those major decisions, number one, are watching for the divergence on the premium. While the strategy can see that, graphically, it's a lot easier for you to know whether or not you can anticipate getting a trade right where you want it to, just by learning how to read the premium. But the other thing that we want to concentrate on is the use of the CCX indicator. On this chart, we have an array of different settings on JRC CCX. Now, we've modified this indicator from Zurich to meet our needs. But what this indicator allows us to do quickly is to verify the trend based upon the slope of the indicator as well as its relationship to a value of either negative 100 for a long or positive 100 for a short. Now, we're talking in relative terms here. So when we were looking to short this market up here, the primary condition that we want to see happening with the CCX is that the value of the indicator is greater than 100 and sloping down. And you can see that's exactly what we've got right in here. These two lines here, these horizontal lines, are a value of 100. So that's exactly what we've got here on our faster indicator set to 30 and 6. Now we've got a specialized setting in here that we programmed for our traders so that they can adjust the smoothness of this indicator. But point of the matter is that's going to generate a short trade. A long trade would be generated if the value of the CCX is less than negative 100 and the slope is up. So you can see right in here, there's a nice long trade, and over here, there's a nice long trade just using this indicator alone. And again, a nice short above 100 sloping down. But let's suppose that you said, your heart is bent on this thing going all the way down to the 2680 value, and you don't want to short this thing. Pardon me, you don't want to go long at any time. You want to hold a short and just stay short until you come right within that general neighborhood. Can the strategy do that for you? Sure, it's very simple. Turn the longs off. Go into the strategy and just turn the longs off. That's the simple way. But when you don't know exactly where you're expecting to go long, how can you manipulate the major setting here so that you don't go long? Well, the way to do that is to manipulate the setting of the CCX. For example, this big drop here, that's a nice drop, and it shows it very plainly here. But what if I wanted to get rid of this long? The slope is up right here. One way to do that is to just change this setting. Now, as you see, on this particular indicator, even though we started short here, all right, we eliminate this long in here as well as this long in here by just changing the slope. Now, granted, the slope changes again, but it's late. How do you eliminate getting long in here? Well, another way to do that is to change one of the longer indicators, or you could even change this one. It really wouldn't matter. I'll just go ahead and change this. So when we change this setting, all right, we have to change the setting in the broadcast indicator, not just on the plotting indicator. We need to change it on the broadcast indicator. And as you can see, right as you hit the bottom here, you're still short in here. So you'd have to manipulate a couple of times to eliminate getting into a long trade, or at least having the strategy do that for you. But there's a secret that you need to listen carefully. If you manipulate these settings, keep in mind that whatever the value was before you changed is remembered by the strategy. So for example, let's say right when you manipulated the strategy, the value of the CCX was, as you see here, negative 107.38. Now let's get it over here. Negative 113.58. Let's just say that's what the value was. And now you manipulate the setting again. When you do that, in order for the slope to be negative, the value here has to be less than the value was when you last made the change. And that's not always going to happen. For example, in this particular case, we were below 113 here, but now we change this setting and we're at negative 63. That value is obviously higher than it was before you made the change. So momentarily, and this is the point, momentarily, the slope will be viewed by the strategy as positive until the next tick. All right? So it is conceivable that the strategy might be long for one tick. That is for whatever the increment is that you're using. In this case, 1 minute. I shouldn't have said one tick. 1 minute, because you can set this thing up to monitor the value intrabar, tick by tick. You don't want to do that. You don't want to do that. So just keep in mind what I said, because momentarily when you manipulate the settings, you're going to wind up getting a positive trend when in fact what you really want is a negative trend. So it's possible the strategy could go long in there for that particular moment. And if so, just ignore the trade. All right, so you got to keep that in mind so that you don't get faked out. Now, another thing that we've done, and I'm going to change this back. Now here was our low, and you'll notice that right in here, we got some long trades. Premature, we didn't want to go long there. We want to go long down in here. This is where the strategy is pulling off a long trade here, and then again, some nice longs in here. But we don't want to go long here. Now, why did that happen? Well, part of the reason was that the premium, and we'll show you that again, we'll use this time frame. I want to show you the premium. These particular strategy settings do not take into consideration this particular slope. All right, not all of our strategies are watching the slope of the premium on this particular chart. They're using faster settings on the premium. And this is why you need, as a trader, to be careful watching for what the premium is actually doing. Because right in here, you can see this slope is negative and you get some long trades. So if you're watching this, and you should be, you know that's probably not where you want to go long. You don't want to go long until this is hitting the bottom, it's below the slower moving average, and it's sloping up. And that happens, as you can see, right there. Pardon me, right in here. Let's get it. There we go, right there. That's where it's sloping up, and that's where you've got your signal. Okay, so this signal obviously is watching this. These signals are not watching that. So you got to be aware of that. And that's why you need to use discretion and watch the premium and make sure that the premium is in agreement with the direction that you want to trade. And we've got a variety of different settings in here. They're set up as strategies, but really we use them as indicators in many cases. We've got specialized signal arrows that tell us what the premium is doing so that we don't necessarily have to monitor it directly. And that way, when you do get a signal or when you do get an arrow, you can differentiate between whether it's a strategy signal or whether it's the premium that is changing slope and direction. So that's the bottom. That's a nice indication there. And we recommend that if you're interested in this strategy, you come and take a demo, and we'll show you what we're doing. And in so doing, it's important to remember that this is a discretionary strategy. It's programmable, it's automated, it's open source. You can set up conditions according to your own particular preferences or you can use the default settings that we have. But everything is open source. You can see directly at how the strategy is coded, and that way, if you've got some background in easy language, you're in a good position to make adjustments according to your needs, and perhaps even come up with some ideas that are not presently incorporated into the code. So with that thought in mind, give us a call, take a demo. I'm Rod Kusin and Spooman for Risk.